Welcome back, folks. Short video to give you some insight on what goes on in VIP. VIP gets a weekly video every week, in particular with regards to the gold market. Last week we spoke about the euro, the Aussie, and my view on the dollar index, and that worked out very nicely, but the primary focus is on the gold market. Now, during the last few days, I highlighted a couple of key levels in the gold market. This is a daily chart of the gold market. In particular, I was interested in two levels. One was this bearish fair value gap and this bullish fair value gap, okay? And also, as the week progressed, the market also formed a new bearish fair value gap. And there were really only a couple of levels or movements that could be derived from this current chart. Either the market was going to hold this level and reprice lower, or push through that level and use that as support to reprice higher. Now, in VIP, we don't really care about direction. We do have a bias that we have in the back of our minds, but the way that we trade is all based on time, day, and setup. Now, if I told you that 80 to 90% higher probability, VIP knows which day the market's going to move and exactly what time the market's going to move, a lot of you will, just by nature, have a lot of skepticism in that comment. There are certain days and certain times the market moves, and Michael from ICT has taught us those elements. And so what I'm going to walk through in this video is this particular trade. Okay, you can see I was short, and then I covered my shorts under this key low. This is essentially what I call the pump for the dump, okay? And it's quite straightforward when we look at it after the fact, because we can see very clearly that there is, or there was, a bearish fair value gap right up here. There was a bearish fair value gap. And that bearish fair value gap, this one here, let me draw it out for you. Okay, it's the exact one that I also marked out on the chart that I've shown you in the community. That bearish fair value gap also aligned with this bullish fair value gap, okay? Making that bullish fair value gap an inversion fair value gap when the market's pushing up into that zone, okay? And therefore, that's an easy trade back down to where resides liquidity, which is any kind of pivot low. A daily low is my favorite, where a lot of institutional traders are going to have their stops, their protective stops under that particular pivot low. Now, this here is Wednesday, okay? And if you go back to my post, what did I say? Wednesday up here. I'm patiently waiting, right? And what am I waiting for? I'm waiting for Wednesday. Okay, so I'm patiently waiting to see what does the market do, what setups does the market offer me, and I'm waiting for a specific day of the week. Okay, it's not always going to be Wednesday. Okay, but in this case, that's the day I was waiting for. And what do we see in the market? We see here, Wednesday. And where is my entry? Right there on the Wednesday. Okay, so in VIP, we learn about the setups. We learn about the best days to identify those setups, and we learn about the best times to be looking to enter into the market. Okay, direction is important, but it's in the back of our mind. We don't really care. We are not married to the bias. We look for the setups. We trade the setups. Okay, now if we drop down to let's drop down to a 1 minute time frame. Now let's go to New York. Okay, let's scroll back. Now remember, we're focused on Wednesday. Now we've already established biases to the downside because we have on the daily chart bearish fair value gaps. Okay, now we're not married to that bias, but that's what we're looking for. If the market shows us a bullish setup, then we may consider that. Okay, so New York opens around here, right? 9 o'clock. What do we see the market do? The market is repricing higher. For what purpose? For two reasons. One, to trap traders in the wrong direction, right? Number two, to seek liquidity. So there are stops above these swing points, okay? Now, the market needs liquidity, okay, and needs trap volume up high if it's going to come down. So this is the key time. What time is that? It's at that time. And my VIP students know that's the exact time that I get interested in the market. That doesn't mean I come and trade every day at the time. That means I come to the market around that time, right? I come to the market around at 9 a.m., 9:30 a.m., hunting for my setup, and I want to execute that around at 10 a.m. That's my favorite time to trade, okay? Market goes up, and what's that telling me? Well, I know the market's coming down, right? It's coming down from a daily bearish fair value gap and a daily inversion fair value gap, okay? Okay, so don't forget, there are a number of things that are going on prior to us getting to the New York Open, okay? So we've got trapped traders in the wrong direction. We've taken out liquidity, okay? That allows large fund traders, institutional traders, market makers to pair their orders, okay? So they are able to execute and enter into short positions. Now, this is a very simple trade, especially for those in my community who know what these setups look like. And the easy target is going to be the low of the New York session, which is probably the low of the day as well, okay? And what do we see here on the left-hand side, okay? At the right time, after liquidity on the left has been raided, right? After the market has pumped up, trapping traders in the wrong direction, after the market's been going down all day, from a daily bearish fair value gap, from a daily inversion fair value gap, okay? We see there is a small little touch point into a bearish fair value gap on a 1 minute time frame. We also see a market structure shift, right? These are the things that I teach inside of the community, right? You may not see the elements that I'm pointing out, but we have a lot of elements that form the setup, okay? If we look at what's going on here, this is a bullish fair value gap. This is a swing low that should have push the market up from there, but it does not. That bullish fair value gap fails on this 1 minute time frame, okay, at the right time, after taking out this swing high on the left, okay, and we're coming into the perfect time to identify these setups, okay, and then we have the market coming up into a smaller time frame, bearish fair value gap, right there, this little pin coming up, okay, and our immediate target is going to be back to the low of the New York session, right, back down to this low here. That's no small move, okay, we're going from 4,900, right, around about 4,900 down to 4840. That's a beautiful move, okay. If we calculate the pips, let's calculate the pips. Entry would be up here, down to there, right? That is over 500 pips, okay. There we go, straight down into the low, okay. On the right day, at the right time, and in the direction of the higher time frame. We've got to use the higher time frame to identify the bias. Now, as I said, bias is not something we are married to, okay, but it gives us something that we keep in the back of our minds, okay. Now, let me show you something also, another easy setup to identify, and Michael talks about this all the time. This is for you to go and study. Let's go back to 9:30, okay, New York. Now, Michael talks about the first presented fair value gap, okay. So here is the New York Open, okay. After 9:30, this right there is the first presented fair value gap, okay. What do we see? We see the market at 9:50. That's my favorite time to identify setups, and my students in my VIP community know exactly why. And it comes straight into the first presented fair value gap. Easy entry from right there, easy exit just to this swing high, okay. Easy entry, easy exit. That's for you to go and study, right? How many pips is that? Over 300 pips, okay. So that's for you to go study. Doesn't mean it's going to work every single time, but you go do the study and you identify the win to loss ratio of that setup, okay. What am I looking at now? Well, I don't see any reason right now for this market to change its course, okay. Right now, this market, and this is my opinion, this is not a trade recommendation, right now the market's headed lower. And until that changes, I don't see any reason to go against what I see on the charts. But what I do see on the charts, and where my eye goes to, if I'm seeking liquidity and we're following the current direction, well, to me, liquidity rests there, and liquidity also resides under there at 4,400, which is big figure, okay? Now, that's not a trade recommendation. That's just what I think is what I see in the charts, in line with where the market's moving right now. Now, am I married to that bias? No, not at all, because it doesn't bother me where we're going. What I'm interested in is what is the market showing me at that specific time when I am interested in trading the market. And that'll be the middle of the week on a Wednesday, or potentially maybe at the end of the week, which is a Friday. But it's not always going to be those days, okay? So to me, there'd be a lot of liquidity residing below that level, and this is an obvious one. It just sticks out. And why is that right on a big figure? Again, that's not me saying that's where the market's going, and it's not me saying that's a recommendation. Just if I'm trying to identify liquidity in line with the current direction, then that's what pops out to me. I hope the video was useful. I encourage you to join the VIP community to learn how to read the charts. Link is in the description of this video, and I look forward to talking with you again soon.